All right. Had to add myself to the stream there. Welcome back. Live Q&A every Monday, 6 p.m. Pacific Standard Time. Matt, the mortgage guy here. Any mortgage questions you have, any real estate related questions, anything you want to know from my point of view as a mortgage broker who talks to thousands of consumers every single year, who talks to hundreds of real estate agents every single year, day in and day out, living, breathing in the trenches of mortgage, real estate, and the like. I'm happy to answer any of your questions. I pride myself on being straightforward. I pride myself on giving honest answers. I had the pleasure of being on Shadisha Hill's. She didn't do a live stream. We did a recorded interview that's probably going to go live this Thursday. Reached out to me as a real estate agent who does a lot of business in Atlanta and has a great YouTube channel because she said, "Hey, Matt, you shoot straight. I want to get some straight answers to some questions me and my clients have about mortgage." So that's what you're going to get here. If you joined in the past, that's what you've received, and hopefully you're coming back for more of it. Tonight is the first night I'm trying to stream this live through not just YouTube, but LinkedIn and Facebook. So let me know in the comments if you're able to view it there. If you happen to be viewing it there, I haven't been able to go in and tweak the settings. I think on Facebook, it may not be public. It may just be available to just friends. I honestly didn't get in there in time to tweak any of the settings. So future live streams, I'll make sure and adjust any of those settings. If you're here through YouTube, like I see my buddy Basilio, then same as usual. I see your comments. I can comment back. From the little I do know and the little I did see, I'm not able to comment back if you're commenting on the live stream from LinkedIn, although I should be able to see it. And then Facebook, I should be able to enable where I can comment back. Let me see. Apps, websites. I've got to add StreamYard onto here. I'll figure that out later, though. I won't bore you with that. Whatever questions you have, that's kind of the name of the game here with the live. You answer them or you ask them in the comments. I answer them. Every once in a while, I will start the show off with questions I've got. I know last week I asked in the YouTube community, what questions do you have for me? The only question I think that came in after I streamed last Monday was somebody said, "Tell me about underwriting." They didn't necessarily specify what part of underwriting they want questions answered on, but I would guess that the average person who hasn't been through the mortgage process or maybe has been through it only a few times would want to know like what goes into the underwriting process. What exactly should I expect from the underwriting process? And anybody who wants to know on a basic level what is underwriting. Underwriting is you have your loan file that you've set up with your loan originator, loan officer, whatever they want to be called, vice president in some cases. That gets submitted to the lender, and then it gets underwritten, basically reviewed is an easy word to think of for that, where they go through and they go, "Okay, we can see that you make $5,600 a month. That's verified by your pay stubs. That's verified by looking at your W-2s. That's verified by a verification of employment. We've got your credit report. That looks good. That middle score is 752. Here's your debts. Here's how it works out debt to income ratio wise." They review all this stuff, make sure that all the numbers that are in their system, there's a document to back it up, right? Because ultimately in 2021, 2022 and beyond, there's algorithms written and there's automated system where the file gets put into automated system, spits out approve eligible, right? And so the underwriters are there really just checking off, saying yes, document that's here for income here, document that's verifying this person's assets here, document that is got his credit score, her credit score here. That's good. Reviewed that. Make sure that there's no discrepancy. And so really they're, I don't know, I wouldn't say fact checker, but I would say that they're, human eyes and checkers of the information that's being put in the automated system. hopefully that was a half decent explanation for what underwriting does, right? Basilio, good evening. Appreciate the kind words. Do my best every week to provide value however I can. Sometimes, it's running scenarios for people. Sometimes it's answering a specific question. I encourage people, the simplest of questions, which people perceive as, hey, this might be a silly question. Oh, this is something, that's a stupid question. Whenever somebody starts with this might be a stupid question, inevitably it's the best kind of question because lots of people have it. Nobody's asking it. So I encourage stupid questions, I think is what I'm trying to say with that. So ask away. Merry Christmas, Tanner. Closing tomorrow. I love hearing that. It's always good. If we had any part in helping people make it to the finish line, make it there with less stress, less headache, a little assurance from anything we've done on the channel to ease your concerns, I always love hearing that, right? Because that's the purpose of this whole thing, right? Providing education to the masses on mortgage, make it a less scary process. I'm curious. I wonder how do I look? You are live. You are live. I'm trying to figure out if this is streaming. I think it is. Okay. And these questions do show up. I'll figure out how to mess with the settings later. But yeah, I guess we are live on Facebook. Cool. Kelly, glad you found it. Any questions at all, please fire away. That's what this is meant for, is meant to answer as many folks' questions as possible so that you feel more comfortable with the loan process. If you want to know about real estate, my feelings on real estate, although mortgage is what I do, you can imagine closing of hundreds of transactions per year. We see a few real estate deals, right? So like that one commercial says, we know a thing or two because we've seen a thing or two. That applies to real estate for sure. I'm just checking here. We're live on LinkedIn too. Man, these marketing folks at UMortgage they know what they're doing. All right, cool. Jason Hibbert, good to see you back. Did you check your information again before or after closing? Could I request a rate change if there was a significant drop? Remind me of that question again, Jason. You're asking if the rate changed. Could you request a change before or after closing? Type in a quick 2 sentences. Let me know what exactly you were looking for there. In general, the beginning of a loan, you lock the loan and you're locked into that specific rate. It's going to take fairly drastic move to make it worthwhile to pull that lock and either place that loan with another lender or, every lender has like a relock. They're all different in terms of what their relock policy is, but in general, like it doesn't move enough to where you're going to take a locked loan and move that loan. It's just not going to be worth the trouble. But let me know a little bit more specific on that, and happy to answer. Good question here. Do pre-approvals use a hard or soft credit check? You should be seeing a hard credit pull. And the reason why you don't necessarily want a soft credit pull is the same reason you don't want the easiest pre-approval process out there, right? I had this conversation with a real estate agent this morning. Client was wondering why you asked so many questions, why you needed so much to do a pre-approval. 100% for protecting the client. We want to know that we have done our due diligence, fully vetted the client, reviewed credit, reviewed income, reviewed assets, run desktop underwriter, try to foresee any issues that might come up, because right now, as you're getting pre-approved, is the time you want to know if there's going to be any issues with your loan. You don't want to find out there's issues with your loan after you've paid for an appraisal, you've paid for inspections, you're 3 weeks in and you've removed contingencies. Now your earnest money deposit is at stake. And then the lender goes, oh yeah, we didn't ask all these questions up front. We wanted to make the pre-approval process nice and smooth for you. So, we weren't bugging you with all these tough questions, but now we can't get a loan done. So we're sorry. Good luck to you, right? Like that is the worst case scenario. And so the best lenders are asking the most questions, getting a verification of employment, running your hard credit pull, asking for all the documentation up front. There's no reason not to provide it. Once you secure a home and you're in contract, we need this stuff to submit anyway. So if you're serious about buying, you should be serious about getting pre-approved, and you should make sure that all this documentation is there and ready to roll, because the very best transactions are the ones where we have the fullest file. All the ducks are in a row. As a buyer, you don't have any questions as to whether this loan's going to get done, because I'm assuring you this thing is signed, sealed, delivered, right? All we need is a home to match it to. And once we find the home, get into contracts, we order title fees, we press play, we submit your loan, and off we go. Scrambling to get loan documents, to get the things the lender needs after you're into contract, hoping that there's not going to be an issue, guessing that credit score, down payment, all this stuff is going to work, is not the right way to go about it, right? So do everything you can up front. Work with a lender who's taking the time. Again, this is the lender's time, resources. It cost me $36 to run your credit. It doesn't cost you anything, right? And so the lender doing this is doing you a favor. If you're serious about buying, you want to get fully pre-approved, you want it to be a thorough process, that's protecting you from surprises down the road, which, trust me, surprises down the road when you're a home buyer, not good. Inessa, thanks for joining. What is the high DTI for 50% down loans? It depends on what type of loan it is, but even at 50% down, which for some people it's like, hey, listen, I'm putting 50% down. The lender's not at risk. Why would you even bother with looking at my debt to income ratio? Still going to, abide by debt to income ratios that are unconventional. You're not going to see approved over 50. FHA, VA, the government loans, they'll go a little bit above 50% DTI. But I think, by putting such a big down payment your payment's going to get smaller. And so that's going to help the debt to income ratio. But in general, it's going to be the, same as you would see. Granted, if you've got a debt to income ratio of 44.6 and you're putting 3% down, that thing might barely skate by. If you're putting 50% down and you're 49.96, much more likely to get that thing approved, right? Because the automated system views all that stuff and says, well, we've got a 49% debt to income ratio, but there's 50% down, approve eligible, right? So it's going to help. My buddy Kyle, win the house you love. Good to see you, brother. Yeah, don't be sucky on doing live streams, man. Have me on, dude. You name the day, you name the time. It's Christmas break. So I got in here this morning bright and early at 6 a.m.-ish because I did a 7 a.m. video with, I don't know if you've done anything with Shadisha, is it Hill? Shadisha Hill in Georgia. She's a realtor. She got a good channel. Did something with her that's coming out Thursday, but yeah, another collab, man. You name the time. I'm happy to jump on and talk shop. And anybody who doesn't know about Win the House You Love, this guy's got the best content on the web in terms of mortgage, all the best stuff. And he talks in a nice soft voice that people like. Real Estate Shaw thinks that you should have me on, bro. So if he says it's a go, it's a go. Go follow Real Estate Shaw on Instagram. This guy's got some good videos going. This guy's been jamming them out like 5 or 6 a week. You got to go check him out on Insta. Got some YouTube stuff going too, huh, y'all? Jason Hibbert. Okay, so this is the question you were asking. Let me take a look and wrap my brain around it. If the rate was not locked and has dropped since the loan estimate was given. Well, if it's not locked, then it's not locked. Loan estimate can go out, and if it's checked not locked, then by the time you lock it, it's going to be whatever the pricing was that day. But if it's locked, and up in that top right corner loan estimate, it'll say yes or no on the rate lock, and it'll say how long it's locked till. If it's locked and then it drops, you really, this is where people get confused too. And as much as I'm going to say something that people don't want to hear, it's the truth. It's not easy to undo the lock, right? Like, you protect yourself against things getting worse, but you also locked yourself in. And really what you should do as a consumer, you lock it in at 3.16, right? And at the time, that was the best deal you can get. Stop looking at the rates. Like, stop looking at it and being like, oh my gosh, I can get a 3.147 now. I can get a 3.134. It's $7 a month cheaper now. You locked it in. You didn't want it to go up to 3.25. You know that rates are volatile. You did the best you could at the time. Don't watch it every single day. It's like buying Tesla stock and then watching it every day for the next 3 months with no intention of doing anything except for like, did I buy it at a good time? Is it a good deal? Yeah. Zeta, thanks for joining. Faithful Zeta Willingham. I appreciate you. Commenting on all the videos, showing up on all the live streams. You gotta be a top fan. You gotta get like some award or something for that. Is this the lowest inventory you've seen in a long time? Because my area has nothing, and what's out there is way overpriced. Yes, it is. It's been a long day. I've been here since 6 a.m. Hair is falling off. I don't know the exact inventory numbers. A lot of times it's like I go by feel, and I'm doing the day-to-day and not checking on the stats and doing some of that other stuff. But for sure, inventory is very low, many parts of the country. Where I'm at, a real estate agent described it to me well recently by saying, like, there's a lot of not so great properties on the market right now. And it was pretty accurate from what I'm seeing, right? It's like, there's not a lot of really nice stuff on the market. If people are on the market and it's not selling, it might be that the home is not that great of a home. The price is not that great of a price. And really, like right now, this is Christmas week. You're not going to see a lot of new listings this week and next week. People just don't put their house in the market. They know people are shopping this week, but it's not for homes. People are shopping for Christmas presents, right? And then next week is a pretty slow week in the real estate market, where if somebody right now is thinking about selling their home, they have a real estate agent come over to their home who's a knowledgeable real estate agent. That real estate agent is going to say, here's the plan. You do this, you do that, you clean that up, you clear this room out. Let's list your house on January 3rd. Come January 3rd, people are going to be out there, shopping for homes, and, we're going to come out fresh on that day. Very few are going to, decide to list and then put it on the market on December 24th, right? Or go, list it next Friday, right before the new year. January 3rd, my hope, a lot of new stuff's going to hit the market for all the buyers who are like, where's the inventory at? I hope that's when it's coming. Because right now, because of the fact there's not a lot of great inventory, agents I'm talking to are telling me, like, my buyers who really want to buy, who are dead set on buying, getting into contract, are settling for crap. Some agents I work with are trying to talk their buyers out of settling for crap. So there's that. Blessed and bright. Thank you. I know being a teacher hasn't been easy in the last couple of years. I've tried to do my best to thank my son's teachers for all their hard work in the last couple of years, because it's been tough, right? It's been tough for students, it's been tough for teachers, it's been tough for a lot of folks. With that being said, I would not hold my breath waiting for home prices to go down. Depending on what area you're in, this is another interesting topic, right? Because like you live in a specific area. If you're a teacher and you're back to in-person teaching, like you can't live 45 miles from school. It's just not that appealing, right? To have an hour commute each way. And so in some areas, if you want to live in the area you want to live, I was talking to somebody in San Diego about this, like home prices have gotten a lot more expensive, for whatever reason you want to point to: limited inventory, money supply, stimulus, dollar going down in value, whatever the case, homes cost more this year than they did 2 years ago. And this is a common question, so I'm glad you asked it. Will prices ever go back down? My answer, my advice is that you should probably plan or expect them not to, right? If in the neighborhood that you're looking to buy, houses cost $400,000 and you can get a mortgage at 3.125%, you have to look at that and say, as a teacher on a $65,000 a year income, what's a comfortable payment? Is there other debts that need to be cleared? Is there, a way where I can find something maybe a little bit smaller and it's $340,000? Whatever the case may be. Unfortunately, if I were to make a prediction 6 months from now and 12 months from now, homes are going to be more expensive and the interest rate's going to be higher, meaning like double whammy. It's more expensive on a monthly basis because the price is higher, but not only that, the rate is higher. If we take the payment on let's say that, you could buy a 2-bedroom, 1-bath for $350,000. You're like, you know what? I just want to own something. I'm tired of renting. Rents keep going up, which is a whole nother subject. 11% year on year, and rents will continue to go up. But let's say that you could find a 2-1 for $350,000. You're like, you know what? I'm gonna bite the bullet. I know that I've got great credit, and I can put 3% down or 5% down and get into this home. If those numbers make sense, $350,000, 5% down, 3 1/8, very little mortgage insurance. It's something that not only should you consider, but you should also look at or plan for. What if that same home, let's not use crazy numbers, let's just use 5%. What if it's 5% more expensive in 6 to 9 months? And we go from $350,000, it's been a long day or else I would do this without a calculator, to $367,500. And everybody, Mortgage Bankers Association, Fannie Mae, Freddie Mac, National Association of Realtors, everybody agrees rates will be higher next year. So 367,500 and 3.625. Rates have gone up. Home prices have gone up. I'm going to do it real quick in the background. I'll try not to take too long, but I'll be able to tell you at the 3.625 and example. Let me see, loan amount. I'm putting 5% down. So I got a $349,125 loan amount. This is the future purchase. $349,125 loan amount on a $367,500 purchase. And I'm talking about the future now. I'm talking about 3.625 interest rates, not today's interest rate. I'll use 3.125 for that. But future interest rate, just the principal and interest, not taxes and insurance. I'll tell you what the difference is going to be price-wise. 3.625. 1592. 1592 is what it is on that 349 125. If we bought now at 350, because we said it would be 350 today, and we put 5% down, now we've got a 332 500 loan amount, and we're going to use 3.125 as today's rate. If I was Kyle, if I was Win the House You Love, I would have like a white notepad. I'd be taking notes. You'd see the stuff on the side. Remind me, Kyle, to get with you on that. I got to do some high-level stuff like my buddy Kyle. 1424. Notice how 350 to 367 500 is not that big of an increase. 17,500, small increase. But then 0.5% in the mortgage interest rate. The payment difference is $170. That 5% increase in purchase price also means you're paying slightly more in taxes, slightly more in homeowners insurance. So probably $180 to $200 per month for a little 5% increase and a 0.5% interest increase. That's where this specific question and this scenario scares the heck out of me. I'm on the buyer's side. I want prices to go down. I want rates to stay at 3%. I want buyers to win. I've got 1,128 people in a folder that says pre-approved, right? I want every single one of those folks to be able to buy a home, to be able to do this. But the truth of the matter is, based on everything that's going on, based on money printing, based on the supply of homes, based on the demand, based on demographics that show 34 to 36-year-olds, the birth rates, there's more and more of those folks. They're forming households, they're buying homes. And as much as people want to say like homes are unaffordable, like where are these people coming from? There's 34 to 36-year-olds that, one makes 80 grand, one makes 100 grand. They make 180 combined, and like buying a $600,000 house, they're willing and able. If homes go up another 10%, they're still willing and able. Like I don't see the demand side getting pinched or hurt or decreased. And I don't see the inventory side. I don't see homes magically popping up. In California, there's regulations. There's all kinds of stuff prohibiting affordable homes being built, affordable homes hitting the market. And so, unfortunately, this is just my honest answer is act as if they're not going to go down. Run the numbers, talk to somebody you like and trust. Maybe you'll find, okay, 350, 5% down, 3.125%. It's not comfortable, and maybe that 1424 with taxes, with insurance is $1,800 a month. Maybe you're renting for $1,400. Maybe that $1,800 feels scary. Maybe it feels like a stretch. If you qualify, if the debt to income ratio numbers work, and $1,800 is not too much of a stretch, it might be worth it knowing that when that $1,400 rent payment or $1,500 rent payment goes up 10% a year, and then 6% the year after, and then 6% the year after that 10 years from now, it's going to be $2,250, and you're locked into a 30-year fixed rate mortgage, and your mortgage payment is still $1,800. That's why people are living in great neighborhoods, in great homes with a $1,400 mortgage payment, $1,100 mortgage payment. I see the mortgage statements all the time. Got people living in $1 million homes. They bought it at $425. They've owned it for X number of years, but that fixed mortgage payment, that fixed rate, 30-year fixed, that thing's beautiful. And as we see inflation, as we see, more and more money pumped into the economy, like having that 30-year debt for a long time is how you fight inflation. All right. Hopefully that answered. I really appreciate the super chat. I saw that. I don't know where it went, but I saw it up there. So I appreciate the heck out of you. Thanks for joining. Thanks for asking the question. It's a pleasure answering it. Hopefully I did it justice there. Okay. Currently I have a conventional mortgage, but would need to relocate while doing a renovation. Should we refi into an FHA? Why in the world would you want to refinance into an FHA? First thing to think about is an FHA mortgage, you're going to be charged an upfront mortgage insurance premium, meaning 1.75%. Like if you got a $400,000 loan, what's that, $7,000, 1.75%? It just gets tacked on the loan. You pay mortgage insurance. There's very few people refinancing an FHA. You got to have a real good reason. It's got to be a 612 credit score, and you're doing some sort of debt consolidation where you're, fixing your credit or whatnot. But it's very unlikely that refinancing the FHA makes sense. So my initial no. Drive NYC. Hello. Thanks for joining. Face too much. Conforming loan limits got raised. Yes. Huge. Man, I haven't talked about it in 5 days. What are they? Went from 548, 250 to 647, 200. Man, something like that. 647 across the board. Some high balance counties like San Diego. No, not San Diego. San Diego's only 879. I can't believe that. I thought it for sure was like Los Angeles, Orange County, San Mateo, San Francisco, San Jose. The highest high balance counties are like 970,800. To answer your question, 2 to 4 also went up, right? And if you Google like conforming loan limits 2022, you should be able to get like, I look up California conforming loan limits and it shows me like single family, 2 unit, 3 unit. Let me try to pull it up for you. California conforming loan limits. I actually have it saved somewhere on my desktop. See, there's smart people out there that make flyers. Good for him. I just ran into some mortgage person's flyer. That's fancy. That's nice. Good for him for showing up on the first page of Google. All right, Scott Bueller. I see you, bro. It's good work. Man, why am I not doing this like these guys? All right. JB Mortgage Capital. I'm using your website because it's perfect. Asking myself why I haven't done this. Okay, let me pull this up here. Free promotion for somebody else. I'll always oblige because it's good stuff. All right, let's pull it up. You want to see the loan limits? Here we go. Boom, boom. There they are. So this is California. If you're outside of California, I apologize, but this is, like I said, 970, 800 in the most high cost counties. 647, 200 is the minimum everywhere, literally across the country. And then you'll see 2 unit, 3 unit, 4 unit. So in like high cost counties in California, you could buy a 4 unit and use conventional financing up to 1.867 million. For some people, if you're living in Ohio, you're like, what in the friggin' world, right? Sorry, Kyle, for that Ohio shot, but Ohio's the place I think of when I think of affordable real estate. I didn't say cheap, I said affordable. So yeah, these are the county limits: 1 unit, 2 unit, 3 unit, 4 unit. So it's always going to be, different limits based on how many units. At that 647, 200, like minimum across the board, like this is the number you'll see across the country. 647, 2 on a 1 unit, 828 on a 2 unit, right about a milli on a 3 unit, 1.244 on a 4 unit. All right. Thanks for the question. That was a good one. All right. Eddie is letting us know that real estate is going to the moon. I hope not. I'm in all the places where people are asking me, I'm showing up on podcasts and answering questions about 2022, 6 to 8% appreciation I think would be a good number, right? Some places are saying 16%. Let's hope not. Let's hope not. I mean, that's just like not sustainable. It does wonders for somebody who owns 10 million in real estate because they have a $1.6 million net worth gain in 1 year. But for the first time home buyers, for the majority of my clients that I'm working with, it's just something that's making it harder. If interest rates go up, like I showed in the example earlier, a small little $350,000 purchase with 5% down and a small little increase of 0.5% on interest rate is going to increase that payment by like 10%, maybe even more, right? It goes from probably, with taxes and insurance, maybe it's going from 1,700, 275, 1,700 to 1,900. So yeah, like 10 to 12% increase. If prices go up 5% and rates go up 0.5%. I mean, that's gonna squeeze some people out. Unfortunately, it's gonna squeeze out the people who a lot of people want to see be able to own homes, right? The most affordable price points. The entry-level buyers, it's those people that will get squeezed out, right? Somebody who's upgrading to a second home, somebody who's got, combined income of $250,000, like it's not going to affect them as much as it's going to affect somebody who's, $47,000 a year trying to buy their first house. And so, yeah, let's hope that it doesn't go to the moon. Let's hope that it stops on the hillside. All right, Tribe NYC. I've asked you this before one last time. I seen your recent cash out refinance video. I bought my house a year ago for $645,000. I have $150K equity so far. I'm looking to buy another house. Be a cash out a good option for me? Probably not. And let's evaluate it real quick, right? Like you bought it for $645,000, and you're saying I have $150 in equity so far. So if you owe $495,000, $645,000 value, the max loan amount you could get with a cash out is $516,000. So you would pay fees and you'd probably be able to get $15,000 tops in cash out. Don't ever do that. Don't ever go from 2,625 to 3.25 to take $15,000 in cash out. Right there, it's a hard no, right? Maybe you can get a 2.875 interest rate, but it costs you $10,000 in points. If that's the scenario you're looking at, you're talking to Quicken Loans. Wrong people. Again, hard stop. Don't do that. Better plan is to, save up a down payment. What I think is a really good plan for a lot of folks is maybe this isn't your forever home. Maybe you're going to save up 5%, 10% down on a house in a different neighborhood, or a house with a better floor plan, or a house that's a little bit bigger, or a house that's closer to your parents, or a house that's whatever the case may be. Go buy that as your next primary. And in that case, you only got to put 5% down, right? You don't have to put 20 or 25% if you were buying a strictly investment property while you sit and live in your primary, right? And so first question about should you do cash out? Nope, not even close. Probably shouldn't do it if you're getting $50,000 cash out either. You're right about at that like 75 to 80% loan to value, and you've got an amazing interest rate. Leave that thing alone. ML. I appreciate the question. This is one of those questions, like a lot of the questions I get, where not enough information, right? 49% DTI. You're going to rent out your current primary and cash flow. How much will my DTI drop so I can purchase another primary? Likely not enough to buy another primary, because here's what happens. While you can use 75% of the rental income as departing residents, rental income, let's say that your current mortgage is $1,500. You're going to rent it for $2,000. Yes, you can use $1,500 of that $2,000 as income. Yes, that $1,500 cancels out your current mortgage, but it cancels it out at a 1-to-1. That's 100% debt to income, right? So you make $10,000 a month. You have a $1,500 a month current payment. You've got your Lexus payment. You've got your student loan payments. You've got whatever payments you got. Let's say you have $1,000 in other payments. So $1,500 mortgage, $1,000 in other payments. What's that? $2,500. You see your dream house. You're like, this is sweet. This is something I like. I want to buy it. And it's got a $3,000 mortgage attached to it. You make $10,000 a month. My math might have worked for you. I had you make it $10,000 a month. You seem like somebody who makes $10,000 a month. $1,500 in rental income gets added to the income side. You've got a $1,500 current mortgage, $1,000 in other debt, and $3,000 new mortgage. So you got $5,500. $5,500 on the income side. $11,500 on income. $10,000 plus the $1,500 in rental income, and then you've got $5,500 on the debt side. 48% debt to income ratio. Sweet. If you currently have a 49, my math was probably way off to start, and maybe you only make $6,000 a month with that $2,500 in total payments between the $1,500 mortgage payment and $1,000 debt. In that case, let's use $6,000 a month. You add $1,500 in rental income. Now you're $7,500, and then you're using 15 plus 1,000 plus the new mortgage. Even the new mortgage was only $2,500. Then we're talking $5,000 on the debt side and $7,500 on the income side. You're 67% DTI. The mortgage is canceling it out, but you went from like the 40s to 67. No go. Whatever the case, when you're in this scenario and you're looking to buy forward, you want to do something, it's always best to talk to a mortgage loan originator, a broker, a trusted professional, and say, here's what I'm trying to do. Will it work, right? I've got past clients that reach out to me all the time. And sometimes it's just like, I might buy, I might not. I just want to know if I qualify. Do that, right? Get those answers first before you go out there and start getting excited about buying a house. Thanks for the question. All right. What is the benefit of an 80-10-10 piggyback loan over a jumbo? Looking at $850 purchase price in Sacramento, no other debt, 690-ish credit score, 24 years with same employer. Those 80-10-10s generally, the biggest benefit is that you only got to put 10% down, right? It's an 80% first, a 10% second, and 10% down payment. And so you've either got that or you've got 10% down jumbo. At a 690 credit score, I personally, as a broker, can still get you a 10% down jumbo. It's a lot easier, truth be told, than doing this 80-10-10 where you've got a second lender. That second on this 80-10-10 loan, realize what a predicament they're in, right? They are at high risk. They're taking on all this risk for this 10% second where the first, has all the leverage, right? If something goes sour on this loan, they're stuck holding the bag and they're effed for all intents and purposes, right? They're not going to get paid. And so that second is going to be an adjustable rate mortgage. It's not going to have that great of terms. I would imagine those are probably in the 5s now. I would probably, if I was you, look at a lender that can do a 10% down jumbo. And we certainly can at 690. The rate's not going to be spectacular. But if you're buying something in the Sacramento area and you're 850 with 10% down, you're at 765. We're already at 647 conforming. Like, you're not going to be in jumbo for very long, right? So maybe you buy it and at 690, you're not going to have mortgage insurance on the 10% jumbos that I can broker, but you might have a rate in the 4s, right? Low 4s, but it'll be in the 4s with the 690 score. I can assure you that. know that like 2-3 years down the road, one, your balance is going to go down, and two, that conforming limit is going to go from 647 to 685 to 732, whatever it works out to be, right? Like those aren't exact numbers, but more than likely, like you're going to be under that conforming limit within a 24 to 36 month period between paying it down because you start at 765 and our limits, at 647. Sometime in the next 2 to 3 years, that is going to be an option for you to refinance into a conforming loan. Even if rates go up a full percent, you're going to be able to get something in the threes conforming more likely than not. So that's how I would probably go about it. I can help. Oh yeah. I'm going to get with you. I want half my screen to be like some sort of whiteboard that I'm drawing on. I want to be high level, like Kyle from Win the House You Love. That's the benefit of being in your 20s, man. You're like a tech genius. Old 41-year-old dude like me is just like, I got pad and paper. I mean, this is my technology, bro. This is the gist of it. I mean, I can make some good Loom videos with some Excel spreadsheets. Anybody who's worked with us knows that, I do a mean Loom video, but I got to get with you on that because I like the way that looks and it's going to help people. Blessed and bright. I appreciate you. That's what a super chat looks like, folks. If you want to be cool among your 8 and 12-year-old kiddos, let them know on YouTube you got yourself a super chat. What happens when I star it? When I star the comment, what does that mean? Does that do something? Thank you. I appreciate you. I really do. Alvaro, thanks for joining. Good to see you. Just joined MTMG family. What's up, Alyssa Hines? How you doing? Oh, you know what I should mention to you guys? I literally just made the change. I have a video tomorrow that the course that I did, I made like a 10 video course, really trying to like help people shop for mortgages, provide mortgage info, a compacted thing. I've got 550 plus videos on YouTube, but I made a course within the last few months. I did it for a friend of mine. You guys may or may not know Mike Zuber, One Rental at a Time, but he said, hey, can you provide some material that I can put into my course, mortgage, helping people shop mortgages, get the best mortgage, all that stuff. So anyhow, I think I had it for $97. And I just told myself, like, I want people to get this information. I don't need to make money off of it. For 2022, let's do a $22 deal. So this course is available. There's the link. I wonder if I can go, Matt, the mortgage guy. How do I put this in the chat? I'm going to try to put this in the chat, see if I know how. It's $22. If you're buying a home in the near future, I think that there's valuable stuff in there. Matt, the mortgage guy school, teachable. All right. Copy, put this in the chat. I'm pretty sure that Teachable gets a cut, and if I sell it for $22, I make next to nothing. It's exactly how I want it. But I think that if you're in the market to buy, there's some information packed into there where you won't have to go through 550 YouTube videos to find it. Use that link, $22 special. I don't know how long I'm going to do it, but I figured it might help some folks. So go check it out. All right, R. Tony, which banks do you recommend for a cash out refinance? I want to invest the money to purchase a multifamily property. I'm not sure if you're asking for like where you should do the cash out refinance Or like some people asking me lately, like, hey, if I do a cash out refinance, where should I park the money while I'm waiting to do a purchase? Because when you say cash out refinance in banks, I can tell you your first thing is you don't want to do it at a bank. No knock on banks. Like for a mortgage, they're just not the best place. They're really not. It's becoming more and more clear to a lot of people. You know what's crazy is I talk to a guy every couple of weeks, and he gives me a bunch of mortgage data. And it's crazy how over the last 5 or 6 years, banks versus non-banks. Non-banks are brokers and direct lenders and everything's not a bank, right? The pendulum has swung to where it used to be like 70-30. Banks used to do home loans and then non-banks were 30%. It's swung completely to the other side where it's like 70% non-banks now. Banks can hold your money. They can sell you a CD. Some of them have some great, partnerships to do investment, like Chase has got Charles Schwab. Mortgage, it's not the best place. Antiquated. Their processes are just horrendous. They take longer. They're more expensive. Nothing about it benefits the client. And I mean, I don't talk bad about most anything because I'm just a nice guy. There's nobody that's going to tell you the bank is the best place to get a mortgage. All right, enough beating that one. All right, what would happen if I moved back into my rental after 4 years of renting it out? As far as to how do they determine it's now my primary if I don't refi? Should I keep the loan as investment property even though I'll now live in it? My rate is at 3.125. Sure, like if you wanted to refinance it as a primary, you would have to show and prove like, hey, I moved back in. This is my primary. If you're just moving back in, your loan that you originally get, no matter what happens, right? Somebody buys a home using an FHA loan. They live in it for 5 years. They end up moving across the country and they buy a new home with a conventional loan. You don't have to do anything with that original loan. That loan, as long as you're making the payments, the bank's not concerned that, hey, this is no longer primary, you got to refinance out of it. That can remain the same. Just like your rental property, that's a rental property. If there was significant benefit and you were now living in it, you would want to refinance it. But given that you got a 3.125, it's don't refinance that. Just leave it alone, right? And the bank's not going to sweat you saying, hey, it's an investment property loan. You're living in it now. They're not worried about that. What they're worried about is you trying to say something's primary residence. You're buying it as an investment. That's where they're not too happy. All right, Alyssa. I have some investment properties. I don't have a mortgage on none of them. What will be my best move on pulling money out of the homes? Continue my process. By continuing your process, I'm guessing you mean building your portfolio, buying more homes. This is something that I'm doing a ton of right now. Work with a ton of investors. As a real estate investor myself, I think that I align with these folks a lot when we have conversations about what the game plan is. You would want to look at them and there's 1,000 different options, right? You might have 4 homes that are worth $1 million total, right? You got 4 homes that are each worth $250,000. For Kyle, it sounds like a big number. For somebody in California, it sounds like a small number. Sorry, Kyle. Little dig on you, buddy. You can get me back on your live. Talk about my bad lighting or something. You'd want to look at those, Alyssa, and kind of figure out like what is the game plan. And then I would also encourage you to look at those individually. And maybe you've got those 4 homes. One rents for $1,425, one rents for $1,250, one rents for $1,900. You want to take into consideration, like, 1, what are your goals? 2, you don't want to turn any of these things into what my buddy Mike Zuber would call an alligator, where it's eating you every month. It's if you got a $1,200 rent payment coming in and you refinance and have a new mortgage payment with tax and insurance of $1,300, that's not a good thing, right? And so you would want to look at them individually and say, you know what, if I pulled we'll call it 60%, $150,000 cash out of this property. What's the new payment going to be with tax and insurance? Okay, that new payment is $875, and I'm making $1,200 a month on it. I'm still going to cash flow, albeit after expenses and stuff, it's going to be relatively small, but I can redeploy that 150 where I'm going to get, $500, $700, $800 a month in cash flow over here, and own more real estate, see more appreciation, see more debt pay down, all the beautiful parts of real estate, and really like a good conversation, right? I've had numerous conversations, numerous emails where somebody does something like that. Here's what I got. Here's what I'm looking to do. What are your thoughts? And, you can start off by saying, my thought was I want to do 80% cash out on this property or 75% cash out on this property, and then take that money and buy a triplex, buy, a duplex here where I'm going to do, Airbnb out of one side and long-term rental, whatever the case may be, right? Like figure out what your goals and game plan are and then structure the loans accordingly, which, sometimes I enter a phone call like I did this weekend with a couple different clients where I don't know the answer. You don't know the answer. Let's talk about it. 15, 20 minutes in, you go, you know what? I think we got it. I think we're going to do a refinance on that property and that one. We're going to go 75% cash out on the one that's worth this much. We're going to do 60% cash out on the one that's worth that much. And with that capital, we're going to be able to deploy it and expand the portfolio, do all the things you're looking to do. So that's my best advice there. Kelly Gibson, what I do about the primary residence requirement. Let me see if this is related to another question. Currently have a conventional mortgage, but would need to relocate. Yeah, you can relocate without any problem. Just leave it in a conventional loan. There's no primary residence requirement. Leave that one conventional, go relocate. Yeah, so you're fine. Follow up and let me know if there's anything else I missed, but you should be good to go there. I guess my goal is to refi cash out, but their lease is not up until May and rates could be somewhat higher by then. I know you meant 2022, so you mean 5 months from now. Okay, so you're moving into it. It's a rental currently. It's 3.125. I mean, I guess you can't really do much, right? You got to wait until May. Look at it then, and depending on how much it's worth, how much you owe, what the cash out refinance terms are then, you'll have to decide whether it's worth it, right? Maybe rates are similar. Maybe you got to pay a half a point to get it to 3 1/8 or get it to 3 1/4. It's kind of tough to, guesstimate, prognosticate on what it's going to look like then. But really you can't do much, cash out refinance on investment property right now, much higher rate, probably not advised. And so you got to wait and see, I think. Zeta, do you recommend investment property, or is being a landlord too risky in this day and age? It can be risky, but like anything that's worthwhile, you got to take risks, right? If you talk to a number of different people that I've done loans for, a number of different real estate investors that I've had the pleasure of, joining their podcast. They've joined here. Mike Zuber is a great example of, 180 units in Fresno. He's doing all right. It wasn't perfect, probably had $70,000 or $80,000 worth of overdue rent payments during the pandemic as people were losing their jobs. And, he had the ability to, put some of these loans into forbearance and not pay them because his tenants weren't paying, but he didn't, kind of had to eat some mortgage payments and 60, 70, 80,000. I don't remember what the right number was in back rent due to him. But, even with $3 or $4 million, I'm not talking about 180 units. I'm talking about somebody who has 6 units, 8 units, 10 units in California. Imagine what that 15% home price appreciation did over the last year. Over the last 2 years, 25%. If you owned $3 million in real estate and home prices went up by 25%, the value of the real estate you owned went up $750,000. $750,000 in net worth gain. Rents went up, so you weren't making less, you're making more. Interest rates went down. People refinanced their mortgages into lower interest rates on primaries and on investment properties. So people who owned real estate over these last couple of years absolutely crushed it. If you believe, like I believe, that when money gets pumped into the economy and we print money like it's going out of style, and inflation is not transitory, it's here to stay, I see this trend continuing. Like I said earlier, I hope it's not at the same levels. I don't want to see another 15% year over year home price appreciation. It would do a lot for me and my family who owns real estate. But for all the buyers that I work for and all the people that I'm trying to help secure homes, I don't want to see it. But people who own real estate in an inflationary environment where real estate is going up in value are going to win. Over the long term, Zita, like nobody has ever looked back 30 years and been like, gosh darn it, I wish I didn't own real estate. My very first house I bought in 2006, $345,000. At its low, it was worth $180,000. When I refinanced it into a 30-year fixed rate, my payment was locked. It's not going to move. In California, your taxes can increase slightly, like a 2% year on year. But for all intents and purposes, my mortgage payment is going to stay the same forever. It looked like I was an idiot, maybe, in 2010. My wife convinced me to buy it in 2006 and said, real estate's good. Looking back, like most of the things that she told me, she was right. 15 years later, still own the home. It's probably worth $550,000. So it's worth $200,000 more than we bought it for. We've moved out, many years ago, and it's renting. The rent covers the mortgage payment. We watch it increase in value over time. We watch the debt that we owe on it go down over time. So by the time one of my kids moves into that house, it'll be worth $700,000. We'll owe this much. In 2006, when we bought it, we could have rented. Maybe we could have rented for $100 or $200 cheaper per month. Funny story and funny thing to think about. When I bought that house, it was probably out of my budget. 2 roommates, both paying $450 a month. Me and my now wife dating and, sharing that house and quote unquote house hacking before we even knew what house hacking was. They were paying $900 of the it's like a $2,700 a month mortgage payment. 6.75 first, 12% second. Both adjustable. Nasty. But you don't have to worry about those nasty mortgages nowadays. 30-year fixed rate mortgages under 4%. Everybody watching has an amazing opportunity. Owning real estate, an appreciating asset with a fixed rate mortgage in an inflationary environment, I'm hanging up on the live, I'm buying real estate. I think that no matter what happens, short term, 3 years, 5 years, over the next 2 or 3 decades, if that's what you're doing it for, is for the long term, you're going to win. If you're flipping, 2024, home prices might go down 10%. You might lose. I don't see anything happening to real estate prices in 22 and 23. And maybe, like I stated earlier, maybe prices don't ever come down, right? But rant over. Real estate, good. And I'm not a smart dude. I just know that if millions of people have won using real estate, it's probably a tried and true method for accumulating wealth. All right. What's up, Ryan Wilson? Thanks for joining. I don't know how young people do it. Our home has more than doubled in value since 2016. We have 2,000 square feet at $680 a month with tax and insurance. This guy is crushing it. This guy's definitely in Ohio. You must have done a loan with Seagraves. You must have done it with Win the House You Love. That is pretty wild, though. Since 2016, I'm trying to think about home prices around here. I don't think most parts of Sacramento have seen a doubling since then, but I would reckon, man, I sound like an old guy, like 50% up in a lot of areas around here. A 5-year double. That's pretty good. You're welcome. You are welcome. You are welcome again. Mateo, very welcome. Let me know how I can help. Let me pop this up real quick. If anybody wants to just ping me, there's a couple different ways. If you want to have somebody call you back, talk to you about your specific loan scenario, greatmortgagebroker.com. If you have a question where you're like, listen, I just want to send you a quick question, Matt. I don't want to do it on the live. I just want to know. Maybe I want to send you a loan estimate and say, hey, this looks funny. Can you review it for me? Matt@mtmg.com. I'll get back to you as soon as I can. If you're looking to get pre-approved, if you're looking outside of California and you're like, hey, I want to connect with your team in Florida, I want to connect with your team in Tennessee, greatmortgagebroker.com. Whatever the case, hopefully I can help you out. Froylan Hinojosa. Looking to get my mortgage broker license in California. What are the steps you recommend? How should I get started? There's tons of online resources. I had this conversation today with somebody who was new, well, not even in the industry, right? They were looking to get started as a new loan officer. I think that the best way to get started is in some environment. And here's where I'm just going to leave it up to you to kind of figure out where you find this environment, where you're around a lot of loan production. If you start how I started, if you start how a lot of people started, then if you're self-sourcing all your deals, you might only self-source 15 deals the first year, 28 the second year, 40 the third year. You're not going to see a lot, and so it's going to limit how much and how fast you can learn. I truly think you get on a team, you get in some environment where the loans, the leads are coming to you, you get to weed through 40, 50 deals a month, whether that's as a, loan officer assistant, production assistant, admin, whatever it is, being part of a team where you can see, touch, feel, experience different loans, different scenarios, different problems, different solutions. That's where you're really going to get the mortgage education. The person I talked to today, who was in their early 20s, I reminded them that the average loan officer today is 57. If they're not embracing technology, if they're not changing rapidly to adapt to a changing environment of how mortgages are done, how people want to be communicated to, all that other stuff, they're going to become extinct. These new folks are going to have immense opportunity to do mortgages in a, new way, right? In my mind, the way that mortgages are going to be done in the future is going to be very efficient teams like this one who are able to do high tech, high touch, meaning embracing technology to make the process smoother, easier, faster, and also giving high touch where we're providing real advising, right? Me and my team have 100 years of mortgage experience where we can help you steer clear of this Quicken Loans, who was just having a client sign loan estimate paying $11,500 in points. Stay away from that trash. Combining those, right? Combining the technology with real world, real good advice and experience from a human being, and doing 50 loans a month, 100 loans a month, so that you can do them at a smaller margin meaning you're making less dollars per loan, but you're doing a lot of them. That's how the future mortgage is going to be. If you're young and you're willing to embrace technology, you're willing to learn, you're willing to add immense value to the person on the other side who's getting the mortgage, you're going to win. Best of luck to you. If you have income, cash out refinance. Ping us, like I said, greatmortgagebroker.com to talk about your specific scenario. The best way to go out pulling money out is a cash out refinance. And so, one, you got to find out if you qualify for conventional financing. You've got to have income on paper, whether that's W-2 income, whether that's rental property income, whatever that income is. That's got to be enough to offset the mortgage payments, the homeowner's insurance, the property taxes, the whole kit and caboodle. And so, yeah, happy to chat. GreatMortgageBroker.com. Start there. You needs to be in NYC. I agree. New York is one of the hardest places to get a home loan. I'm sorry, to get a mortgage license. Their regulation, I know people that live in New York and they've been trying for like 2 years plus. It is excruciating to get a mortgage license in New York. But lucky for you guys, where is this guy? Ben Lavender, the British mortgage broker. This guy is the man. So don't worry that I'm not there yet. Give this guy a ring. Tell him Matt the Mortgage Guy sent you. Ben Lavender, NY. I'm talking bad about Eric Tepley. You're not 57 yet, bro. You're like 54. You're a spring chicken, dude. You're in your 40s still, Tep. So, you're getting older, but one of these days, you got to embrace technology. One of these days, you got to make some videos. I'm going to get you on camera if it's the last thing I do. Maybe Eric Tepley joins the live. Maybe you guys need some fresh blood, some old school mortgage knowledge from the Tep Master. Great mortgage broker in California. If I retire or if I go missing, just Google Eric Tepley. Find him. He'll help you out. I paid cash for an investment condo in Nashville 2 months ago and have a tenant in place. Is there any situation where I don't have to wait another 4 months of seasoning to do a cash out refinance? You can do a cash out refinance, but the problem is no matter what it's worth, they're going to limit, if you paid $80,000 for it, even if it's worth $200,000, you can't get a loan for more than $80,000. That's just a Fannie Freddie rule where, 6 months is the seasoning period before you can get an appraisal and use that new appraised value. Because in the case where you're 6 months out and it appraises for $200,000, now you can go up to $150,000, up to 75% of the value. Whereas, investment property, 2 months into it, you paid cash for it. A lot of people who are trying the BRRRR or whatever the case may be, just can't do it. So no way to get around that 6 month seasoning. I'm sorry. This is a great live, Shaw. But it is great. You're right. All right, Alyssa. No problem. GreatMortgageBroker.com, right? We'll check out your scenario, see how we can help. Investment property construction loans in Oregon. So you're trying to do like a ground up construction on investment property? Man, these questions are coming in. Like I've answered all the easy ones, I guess, right? Now we're talking about investment property construction loans. Alyssa wants to pour a foundation and get funding on that. truth be told, like most mortgage brokers, here's another true statement, right? I feel like me and my team are really good in this lane. Conventional, FHA, VA, USDA. If you want construction to permanent, if you want ground up construction, if you want land loan, if you want the other stuff, we're not the one. And a mortgage broker who's like, yeah, I can do it. That tone of voice means they've never done it before. So I probably would find someone who does it all day, every day. For you, Jason, investment property construction loan. I've got somebody in Oregon. Ping me if you want. And they may or may not specialize or know something about that. But like me, they're going to tell you that straight away. They're not going to pretend like they know what they're doing and then, fumble F their way through the whole deal. So Matt at mtmg.com, ping me. I'll connect you with Karen and we'll see if she can help. Land parcels that are residential. It's just a different type of loan, Alyssa. There's construction loans, and then there's, locally in California, Umpqua Bank does a construction to permanent where you get the construction financing. They release it at different phases to get you to the end, and then once you've got a completed product, they'll refinance it into a permanent loan. It's construction to perm type thing they have. I'm not doing those. I'm not trying to do my first deal of a certain type with anybody, right? Work too hard to build a good reputation to go up, screw it now by, taking 75 days to close a loan. Joey G, where you been this whole time, man? We've been on here for pert near an hour 20. You got to remind these people to smash the like button. Hopefully they're smashing it. I don't know if there's anybody smashing it over on Facebook or LinkedIn, but that's going to be the new jam going forward. Is we are streaming it live, not just to YouTube, but to LinkedIn and Facebook. And one of these days, I'm going to figure out how to merge all the comments so we can get them all from all the different places. Thanks for joining, Joey. Good to see you, brother. Since we're talking about the future process of home buying, what do you think or have heard about using crypto to purchase homes? It's certainly going to happen. And I think like most things with crypto and NFTs and the metaverse and all that, like before you see universal adoption or mainstream adoption, that's a long ways out, right? Long ways out. United Wholesale Mortgage, who I send a lot of business to, earlier this year said we're going to start accepting crypto as payment for our loans that we're servicing. I'm pretty sure the last conversations I had with execs at UWM, like they had processed 2 people that wanted to pay their mortgage with crypto, right? It's just not something that, of the hundreds of thousands of mortgages they service, 2 people, 3 people want to pay it with crypto. I think the same thing's going to happen in real estate. Is it's not going to really become a thing or become a trend until more people want to do it, right? Like you can use your Matt the Mortgage Guy NFT and trade it for a week at a Malibu mansion. That might be coming in 2035. I don't see it happening anytime soon, so I wouldn't have too much time, energy, and focus on that because it's just not that close. But someday, I'm sure. There you go, Zeta. Smash the thumbs up button. I appreciate it. Jermaine, thanks for joining. Joey. Merry Christmas, brother. I appreciate all the love and support. So happy holidays to you. I guess, this is Christmas week. I'm going to be on 2 days after Christmas, next Monday. But it's a good opportunity for not only me to say happy holidays to you, but anybody watching, whether it's live, whether it's on the repeat. I appreciate the heck out of you. I hope this message and this video find you well. If I can give you a Christmas present of answering a question that's going to positively impact your home buying experience, it's going to help you in the future in a home buying experience, whatever the case may be. Let me give you that gift of mortgage knowledge, peace of mind that comes with having a little bit more education around something that people deem as scary or tough, right? Mortgages aren't that difficult. If you're properly educated, if you understand it, it shouldn't be scary. Let us be that education platform that relieves all the mortgage stress. Do you think fears of Omicron will slow the rise of mortgage rates? I didn't discuss this earlier, and this is a great question, an amazing question. In general, you can use this as a rule of thumb. The more uncertainty there is in the market, and uncertainty can be, what was going on with a big builder in China? What was their name? I already forgot it. That's how quick news moves, right? Like there's uncertainty. Is the Chinese housing market going to crumble because this big builder is going bankrupt and they're not making good on their debts? Is that going to affect the U.S. housing market? Is the fears of Omicron and the spread going to shut down some markets? Going to affect the economy? For certain, uncertainty keeps interest rates low, right? And the whole reason why the Fed said, hey, the economy is back up and running. We see good unemployment. We see numbers in the economy that lead us to believe that things are going well. Therefore, we can raise interest rates to tame inflation going forward. If there's some massive spread, there's fear about Omicron, becoming a bigger deal than it is, then to your point, Joey, it does slow the rise of interest rates. And let's say that Omicron becomes this humongous thing over the next 6 weeks. The Fed is going to readjust their plan for the taper and readjust their plan for increasing rates in the future. I promise you, because when there's uncertainty, they're like, okay, we're not going to provide, we're not going to do things where we're basically throttling back economic activity if there's uncertainty from this other thing, right? So, that's a valid point, a good question. And if it's a thing, it will slow the rise of mortgage rates, hopefully for everyone's health. It's not a thing. It's another variant. It's not as severe. Folks are getting better, then on pace, on schedule, rates rise 2022. Just give them all an A, bro. They showed up, man. I was going to make a joke, but I don't even want to say it out loud. It's crazy. Some of the stuff that's going on in public school right now is bonkers. My kids' school, if they don't turn an assignment in or if they get less than 50%, they automatically get awarded 50%. They can't score less than 50%. If you get 25% of the questions right, you get 50%. I can't believe I said that out loud. It hurts my feelings just saying it. Thank you, Jason, for joining. Linda, thanks for smashing the like button. We're coming up on an hour and a half. It was a pleasure answering questions. Thanks for everybody that joined. Let me know if there's something you want me to talk about in a future live. If you want me to make a future video, I try to come up with content that is relevant, because my hope is that with weekly Q&As, with a couple of videos a week that are talking about the stuff that's happening in the real estate market, when you search for relevant mortgage information, real estate information, you find an article from 2018, it just does not apply. It's not relevant. It doesn't matter, right? And so fresh, new content talking about what's going on today, what offers are getting accepted, what's not, what's going on with the real estate market, what's going on with mortgage, what's going on with guidelines. The information needs to be constant. It needs to be relevant. And that's what I'm trying to do here. So anything you see come up in your market you like to see, I'm more than happy to record a video. I appreciate each and every one of you. Alyssa Hines, the Math and Mortgage Guy NFT is coming for sure. 2022. It's going to be, I don't know all the details about it, but I've seen some cool stuff that people have done. So imagine access to a community that provides coaching, that provides investing advice, some sort of access to a yearly event mastermind thing. I don't know. You can do some cool stuff with NFTs. Why not, right? We're here. All right. Thanks for joining. Anessa, good to see you. Tep, thanks for joining, my man. I won't talk bad about the old folks no more. You still young, bro. You still got it. Take care, everybody. Until next time, we gonna see.